Okay, class, today we're actually going to talk about a couple of things. We're going to talk about sales tax payable, and we're going to talk about a couple of other little small items all included into one. You can always go back and rewatch the video multiple times. That's a great thing about technology. If you'll turn your books to page 273, we're actually going to talk about how to record sales tax and then pay for them later on. Now we know that nobody is immune to sales tax. In fact, some states, not countries, some states actually only charge sales tax versus other types of taxes. But the fact is that as a seller of items, you're responsible for gathering and receiving, holding, and paying a particular amount that is going to be paid to the state entity. And in Georgia, it's actually Georgia Department of Revenue, and they take this pretty seriously because that's how they generate revenues within the state to pay for certain things. So let's say that I have an item that I'm going to sell for $100, and we are under a 6% sales tax rate, and I need to record this particular journal entry. Well, what I'm going to do is I'm going to record this as a cash entry as well as I'm going to do accounts receivable so that you can see both scenarios here. What we're going to do is we're going to receive cash for $106, and we're going to credit sales for 100 of those dollars, and then the other $6 is actually going to be applied to sales tax payable. Now, the interesting thing here is we're applying this to a payable, which means you owe this money to somebody else, and you are legally responsible to pay this money to the state entity or the locality that it is owed to. This is not an option. Now, if this was accounts receivable, I would simply do this as accounts receivable, 106, sales for 100, and then again sales tax payable for $6. So that's both of the ways to do this. This is how to collect the sales tax and record it in a journal entry. It really, again, is not an extremely hard concept to follow. It's just to remember that sales tax is a liability of the company that is owed to another entity, so it's not an expense. It's not cost of merchandise sold. It is simply a liability. This is not your money and should never be included within your money. Okay, so once we see how to journalize, how to receive it, let's go ahead and look at the journal entry to pay this particular item. So I'm just going to push the page up just a little bit so we can look at how to pay our sales tax. So when the time comes the following month to pay the sales tax, we're simply going to debit sales tax payable by $6, and we're going to credit cash because simply that's how we paid for it, $6. A debit to sales tax payable and a credit to cash. Now, of course, most companies are going to have a lot more than $6, and this is just simply to simulate it. However, understand that you are responsible for month to month to pay your sales tax if you are liable for it and you collect it. And it's heavily frowned upon by the state of which you are operating in if you fail to do this, because again, they consider this to be their money, not yours. The next thing I want to cover within this particular video here is the closing entry for the merchandising company. And the closing entries are actually listed and started on page 275, and we're just going to recap those real quick. Closing entries, again, are just like service industry closing entries, and there's 4 entries, 4 closing entries, and we are going to close all revenue accounts to income summary. So again, it is revenue, and in this case it'll be sales, will be debited, and income summary will be credited.